Hi everybody, it's Mike DiVita here, and today I'd like to talk to you about reverse mortgages. I want to tell you what they are. I'd like to tell you about some of the characteristics associated with this type of home loan and why it's an amazing tool for retired Californians who are looking to maybe pay off some bills, consolidate medical debt, or simply access the equity in their home to live the retirement they want and deserve to live. So a reverse mortgage is available to somebody who's 62 years of age, who's got significant equity in the home, and he's looking to access that equity, to turn it into cash or income for retirement. Now, before I go into some of the characteristics of this home loan, I really want to go into some of the misconceptions and myths because there's quite a lot of them, and that's what I hear most about when I talk to people about reverse mortgages. They're just getting bad information from people they're talking to. So I'm going to flip over to the whiteboard and put some of these up on the board so you can see what I'm talking about. The number one myth is that these loans are offered by predatory banks or looking to take your property. And that's simply not true. These are government-insured loans offered by the Federal Housing Administration, and they have excellent terms, and it's just another excellent loan out there for you to take advantage of. Number two is that the lender somehow takes title to your property, and that's absolutely not true. You will always remain on title to your home. Number three is that the loan can exceed the value of the property, and that's not true. At no point can a reverse mortgage be more than the value of the property. Number four is that there's these exorbitant costs to put a reverse mortgage in place, and that's not true. The costs to do a reverse mortgage are very comparable to the costs for a conventional refinance or purchase home loan. And the last myth is that somehow with a reverse mortgage, you can be evicted from your home during, at some point in your retirement, and that's absolutely not true. At no point can you be evicted from the property. You can remain in that property throughout your retirement until it's no longer your primary residence. So the bottom line here is if you're 62 years of age, if you have a lot of equity in your home, and you're worried about having enough money for retirement, this can be an amazing home loan for you. Now, here are some of the characteristics. Now, once again, this is a federally insured home loan. To qualify, you don't need any sort of credit requirements. They're not looking at your credit. They're not looking at your income to verify whether you can afford the home loan. And the reason they're not doing that is because there's no mortgage payment associated with the loan. And any sort of money you're taking from the property, it's all tax free. You're not paying the government, any sort of income tax for that money. And the last thing is that, once again, that loan will never exceed the value of the property. So the bottom line here is that, if you have that equity, if you're worried about retirement and, you're of age to qualify for this home loan, it's a way for you to access the money that you saved by paying off your loan. The takeaway here is that, I want you to realize that there's a lot of bad information out there, and you have to get informed about whether this is a good mortgage for you. We have a reverse mortgage guide on this webpage. You can download that for free. It's going to go over a lot of the information I talked about, plus a lot more. And, every situation is different. Please feel free to reach out and contact us at 1-800-239-1103. We're happy to do a home loan analysis and figure out whether this is a good mortgage for you. We're just going to give you all that good information so you can make the choice and understand what you're getting into. You can always reach out via email at mike@mycahomeloan.com. Thank you, and make it a great day.